5.4% to 5.2%. That's the expectation for unemployment. This one here is good. If unemployment reduces, then it is very good. Yeah. Now all these events are going to be at 3:30, 3:30 of our time, and most of them are bad for the US dollar and non-farm payrolls. If you just read something brief about it, you see that a high reading is seen as positive or bullish for the USD, while a low reading is negative. So here the consensus is already lower than the previous figure. But for this one here, it might be, the actual figure that comes out might actually be bigger. Sometimes you get surprised like that. Everything is looking down, and then the actual figure comes out and it is much bigger than what was expected, or even bigger than the previous. So that kind of thing can happen. The market can fake you in one direction, and then it knocks you out when these figures come out. So yeah, but based on the information that we have here, things are not looking very good for the US dollar. Then later on at 4:45, there is the market services PMI, and this one is expected to remain the same. Also the market PMI composite also expected to remain the same. Then at 5 p.m. Okay, these events are going on up to about 10:30 in the night. Yeah, so at 7 p.m. At 5 p.m. One very important event there is the ISM services PMI. So this one will be a follow-up. It will basically be following up from the non-farm payroll. So the impact we have that side, this one here will be like the, if this one here takes you badly, then this one here will be the knockout blow if it follows it up in that same direction. But if you're in a good trade with non-farm payrolls and this one here comes, now you can wait to take profit and wait for this event, and we see how it's working out. Yeah, so this one here, basically a result above 50 for this ISM services PMI. A result above 50 is normally good for this event. So expected, the previous figure is 64.1, the expected figure is 61.5, and 61.5, and they are all above 50. So even if it drops somewhere, as long as it's not below 50, the market impact is going to still be either positive or neutral. So it depends on how it actually comes out. But if it goes below 50, then that's where you get your knockout blow from. Yeah, that will be at 5 p.m., just like 1.5 hours, maybe like 2.5 hours after the non-farm payrolls. So you can you can just wait and do your analysis, and you see the Euro USD has been rising. It has been rising seriously the whole morning. That's what the Euro USD looks like. And now we're at that position there. We're just there right now. And yeah, so maybe so if this event affecting the US dollar, the non-farm payrolls, if it comes out negative, and the market actually follows that fundamental event, this should shoot up. If it's bad for the US dollar, then automatically the euro gains against it. And one key area of resistance that we have is there from this previous high. And yeah, so normally for these events, for most people it's guesswork, but it shouldn't be guesswork, and you shouldn't be held ransom by these events. For example, if whatever happens at 3:30, what is expected to happen is for price to rise because the US dollar will have performed poorly. Now, if price rises, we're going to look at this this long-term event. So when you look at these small charts, it looks like the Euro USD has been rising for the longest time. Even when you look at the 4-hour chart, it looks like there's a very big rise there. But on the daily chart, it's just a small move. So if I put this, Fibonacci from this top to the bottom, just in case we're expecting this to rise, let me put it to the body there. Yeah, so it looks like, let me raise this a little bit. Okay. Yeah, so price is just, it's just below, we've lost it. Okay, price is just below that resistance of 38.2. And that is, so if this event actually comes out negative for the US dollar and price starts rising up, maybe if it breaks above this 38.2, that is above this previous resistance there, you can collect some pips, maybe up to the 50.0, which is about 50 pips there. That's for the Euro USD. Now that is if it goes up, and if it goes down, if it starts selling, okay, here if it's going up, that is one area to look out for, the 50.0, which is exactly where this previous resistance level is. So we have two resistance levels. This one at the 38.2, that can be point A, then point B is that one there at the 50.0. So if price starts rising, then you have point A and point B to look out for. If it tears through point B, then this 61.8, there is really no resistance there. The price just just swooped through it, and yeah, but then this 78.6, that new resistance level that we have is exactly at this point of resistance. So if price starts shooting up and it goes through this 61.8, maybe that's 78.6. But that's a very big rise for in one day for the Euro USD. But anything can happen. And yeah, if if everything follows the analysis, the way the fundamentals are, then we could most likely have a rise there. Now the alternative, if price is to sell, if it's to start going down, yeah, so if that happens, then we have this top and this new top there. So after drawing that line, you can see it is a bit slanted. Yeah, so having that slanting top, then on this RSI, we have a rising top from that bottom, from that top to this top. So here we have some kind of case of classic divergence. So if price is to go down, then this is one area to take profit there where it started rising from. Then another area to take profit is just the same distance going up, downwards. So maybe you can calculate here, there are about 197 pips that it rose. So it could fall back to this, where it started rising from, and it could fall further down there. That's about almost 400 pips if it falls down there. But that is very long term. Now, what we're looking at here is a daily chart. And so we have divergence here, then we have Fibonacci's there. So the one that, the one where price actually moves is the momentum that we take. I always keep saying that just follow up on the momentum after the event has happened. So if the event happens and it's going upwards and maybe a few candlesticks in front, or maybe just starting from Monday, you just take on because here it's going to break some major resistance or support. So depending on which direction it takes, we just keep on following it in that direction up to the nearest take profit. So if it goes up, then we follow those levels that we saw previously. Let me put those levels back there. Yeah, so if it goes up, we're looking at levels 50.0, 61.8, and 78.6, and just above the 38.2. So we have a total of about 200 pips. If it's moving upwards, if it starts on that journey, if non-farm payrolls pushes it into that journey, then you can clearly start buying and take profit up that side. But then if the event somehow comes, sometimes it also depends the currency that you're versing. So the news might be bad for the US dollar, but when Europe is also doing badly, so the market impact there will not be so big. So if this one here starts going down, then we start trading downwards. So let's look at some other charts that are versing the US dollar and see what could happen. So this one here is the USD JPY. Looks to be in a tight spot. Okay, so for all of these events, you just do the same thing. You can wait for the market impact, which should be bad for the US dollar. So here, if it is bad, it's generally going to push it down. So it could push it downwards, and the areas to look for in a downward move, price is now exactly at the 38.2. So you're looking at this 50.0 just below this low point, and then the 61.8, this other low point, and maybe the 78.6, another low point there. You can see how significant this 78.6 is starting to look. Let's look at maybe two more charts. GBP USD, in hour 4, we have an upward trend. In day 1, it looks bearish from this point of reversal. But anyway, this one here also could, because it is the first currency in this pair, when that event comes out, this one is also expected to rise. So the highest levels that it could rise, we have, it's already resisted there at the 61.8. So maybe we are looking at this 78.6, and that's where we are. So there we have some 50 pips. If price shoots up, so it could be a, it could be a short-lived bullish movement, or we just wait for the momentum and we follow it up. Then for the, let's look at gold as the last chart. So gold is very. Let me delete that. So gold is very, it's there stunted. Just let me zoom this in a bit. It's just stunted there. There isn't much movement. So we have these tops. Okay, moving like that. Then we have these. Let me first push this a little bit. Yeah, so we have those top areas. Then we have these bottoms. Let me take it from the, okay, they have these bottoms like that. So this one, price is just in there. Maybe if I take this a little bit lower to these lower tops, then could have some kind of triangular formation inside there. Yeah, and for gold, yesterday there was FOMC minutes, and there was almost no impact. No dramatic impact, if I may say, no dramatic impact. And, it has been just inside there, being squeezed. So whatever happens, okay, if that event for non-farm payrolls, here the expected impact is to rise. Yeah? For gold, the price of gold to rise against the US dollar, or for the US dollar to fall against gold. Yeah, so, but it's still stuck inside here. So if it breaks out above this level, maybe I can add this other top level there, so that we have two areas of resistance. So if it breaks this first one, it will have that second one to break as well, so that we are very, very sure. If it breaks out down here, then but anyway, there are these other bottoms that down here, these three bottoms, which we shouldn't really ignore. Yeah, so looking at those three bottoms here, there is what looks like a breakout, where a price broke out here, and then sort of tested this level, and it's now sort of testing this other level. Yeah, so that could be, something sort of bearish. But anyway, these events here, there's no control over fundamental events. So whatever is happening in non-farm payrolls and all those other events that are going to be announced, it's not something that has already been planned for technically. So As much as the market could be looking like it's heading in one direction, a world event can easily turn those things around. And that could be, that could be something. That could be something that could catch you by surprise. But it's always good to stay focused and you stay on your toes as you trade out those events. If you're not comfortable, going against what you normally do, then you can sit out of it and wait for a new trend to form, and just like that you can make some money off the momentum. Yeah, so I think that's the last chart we're looking at. So this so besides trading like this manually, and you're doing technical analysis, fundamental analysis, it's normally very difficult for so many people, but it's good to take your time and you see what's happening there in those charts, in those countries. You look at their events that come from their equivalent of the bureaus of statistics or their finance ministries, the equivalent for that in their countries, the way we see it here. So you look for those events that they keep on announcing, even their national banks, they keep on announcing all those interest rates, and they are basically telling you how the currency is performing from their perspective. So that is what helps most with fundamental events. For technical analysis, there's what we have already studied, divergence and all these things that I'm showing you. Price action. So many things fall into price action. Anything anyone does is normally referred to as price action. You can't find something that is totally pinned as price action. But anyway, there are always those fundamental trading analysis types that we have always been seeing in the books and on many internet channels and in so many places. Every time someone is very excited about something and they want to show you something about Forex, they always pull out all these pre-programmed strategies, divergence and everything that I've just told you. And they bring out the risk and reward ratio, all those very nice ways to manage the market. They always help you with your risk and reward, and it's not good to ignore them. When you develop your own strategy, it's good to just keep all those events, all those kinds of analysis in mind, so that you don't lose out, so that you don't make losses. They are good guiding principles. They are the very best guiding principles, but that doesn't mean that you shouldn't make your own trading strategy. Things have evolved all the way from the 1600s, when these markets were formed, 1600s through the 1700s, the 1800s, before we were even colonized. So these markets were already there, and things have really evolved. So these traditional methods that we use, they are from those days. So with these new technologies, you can start making your own trading strategies, and they will work. Like when we make a robot, you make a robot based on a certain trading strategy, which is very, which you've tested. So you have to test it throughout a good period of time, so that you see that it works, and that's what validates your robot. And we've been doing so many robots. Previously, last year we looked at so many robots. Even this year I've been very careful not to. When you give out a robot, some people, they get excited and they put so much money there, and when things go bad, things go very bad, and that is not, you might use it the wrong way. You might put so much money instead of just growing an account, and most of the times when you have a robot, there is always the lack of analysis. You have to look at this robot and direct it where it's supposed to buy and sell, so that because it is going to follow instructions the way you've programmed it to, and in case the market becomes funny somewhere, the robot could actually make you a loss. That's why it's good to know how to analyze, and you should know how to analyze and see how it performs, and you combine that with your own analysis. It can even be this traditional analysis, just to give you market directions. It's very good to know the market direction, so that you open the robot either to buy or to sell, instead of telling it to buy and sell in all the markets. Whether it is a bearish market, it can buy. If it's a bullish market, it can sell. So if you just let it loose in all types of markets, there is a possibility that you will lose some money, which is very bad. So to put a robot onto the charts and you walk away, it's sort of a risk. It's sort of a risk. When programming the robot, we can cater for all those risks, but it is still a risk to just walk away and let it do whatever it's programmed to do. It is still a risk. It's even a risk when you're trading manually. With all this analysis that we have in our heads, trading manually is also very risky. That is how we blow accounts. So, but we always put the best formula into the robot because we don't see these things all the time. That's why we keep on improvising, and then sometimes you have to use your stop loss. You lose some money, you make some money, it drags you back. You keep moving back and forth like that. But when you put the best strategy inside a robot, then it will pick for you some good trades. So we've already been looking at some robots on Telegram. It's been exciting for so many people. And there have been requests for a scalping robot. And, I'm working on it. But this one is going to have a lot of analysis. I'm going to explain it. It's, okay, not a lot of analysis, but a lot of analysis for direction. Because it's going to be in a 5-minute chart. So we seriously need to give you direction that only buy at this time and only sell at this time. It's very risky to just let it buy and sell. 5-minute charts for scalping, they are very, very risky, and we shouldn't really take that risk. So I'm working on it. It's not an easy, it's not a simple thing. But I'm working on it, and I will just show you how it works, and I'll give you the explanations for how it works on Telegram. If you're not on that group, you can just join it. You search for Trading Dawn on Telegram, and then you find your way there. There are so many traders there. There's a lot of information being shared there. There are so many new traders, so many advanced traders. It's really nice. There is so much there, and there are so many people to meet. It's a very nice group. So you can just search for Trading Dawn, and then it will lead you to that Telegram group. And so I'll be showing you that 5-minute chart robot and how it works. And then we shall keep the conversations going. So non-farm payrolls is in about 50 minutes. The market looks to be stagnant in so many charts, but just do your analysis and wait for it. And, let's keep on looking at these events. The one of last month was very, very predictable. And, we had some very good trades last month. So this month, it should be predictable as well. If it's not, then we study exactly what happened so that in the future, it becomes as predictable for us as possible. Instead of every time the first Friday of the month reaches, we are all we're all expecting some kind of unexpected thing to happen. So let us keep on watching and studying these non-farm payrolls and all other high impact events so that in the future they are as predictable as possible. So as time goes on, we shall keep on simplifying this work. So that's it for today. Thank you for watching.